Hey guys, what's up? All those top trading reviews. Today I'm going to show you how to trade the naked chart. So let's begin this awesome trading lesson. As you can see, we are currently looking at the Swiss franc JPY currency pair on the 4-hourly time frame. Right, so the first thing we need is some sort of support. So let's go to the daily time frame, right? The daily candlesticks are here, so we need to mark areas of sensitivity. So the first area of resistance or area of just turnaround zone, sensitivity, whatever you want to call it, is over here, right? Do you agree with me? Please leave a comment down below. But basically, why is this a good area? Because look, every time it touched this area of sensitivity, it pulled towards the downside before breaking towards the upside, right? There were literally 5 scenarios. Every time it touched it, moved down, down, and then carried on doing that until it broke towards the upside, right? So this is a good area of sensitivity, especially on the daily time frame. So that's the first thing we mark. Another thing we can mark is another area of sensitivity is the support. Where is the support? Well, I would really say this is a good support over here. This is a pretty good support because, well, on the daily time frame at least, there's the area of consolidation movement. What I mean by that is shot towards the upside, pulled back, shot towards the upside, pulled back. Yes, it broke here. That happens in the Forex markets. And I do explain a little bit more clearly on my other channel where we analyze on the monthly to the weekly to the daily time frames. But as we are looking now on the daily to the 4-hourly time frame, it will do. It pulled back here, shot down. As you can see, start pulling back. Basically, this area of sensitivity has been respected multiple times. Yes, it has been broken a little bit of times, but every time it touches this area zone, it definitely was respected. None of the less, it's also on the 112.000 level, which is a psychological level. And if you don't know what that is, watch my other videos. I'm sure you can find it. Basically, psychological levels are on the Japanese yen currency pairs. Every even number on the Forex markets on the Japanese yen currency pairs get respected multiple times. And as you can see, it's currently getting respected by the 115.000 level over here. So currently we are in a consolidation zone in a little bit. We are seeing resistance in here and we are seeing resistance in here, right? So this is what we established currently, right? We also need to find out some sort of trend, or if there is any trends, right? So we can totally see a nice uptrend over here, nice trend, or you could say it's trending like this as well. Both scenarios are very important. Learning how to understand trend lines. Just drawing one trend line and depending on it is not good enough. If you're trading the naked charts, you need to really understand that there could be a scenario over here. So if, for example, we are trending towards the upside here and our trend is continuing and then it suddenly breaks this trend, we know that potentially there's an opportunity over here to respect this area of trend line as well, and it could turn around towards the upside yet again. We need to have a look at all of these scenarios before you become even a remotely good Forex trader. So once we establish the trend, I'll just leave this one over here since it's the most likely, is the newest trend over here, the most likely scenario. So on the 4-hourly time frame, what do we see? Right, so we marked area zones on the daily time frame, right? We know it's a nice respected area over here and also shooting towards the upside with a nice bullish momentum, right? It's definitely making a new higher highs, now pulled back to the previous area sensitivity and giving us on the 4-hourly time frame a bullish engulfing candle. It hasn't yet closed. 1 hour 18 minutes till closure, so we never enter candlesticks if they're not closed. We always wait for candlestick closure. I don't care if there's 5 minutes left or 1 minute left. You need to wait for candlestick closure, because what usually happens with beginner traders, trust me, I spoke to multiple traders before, and they enter a trade when there's like 15 minutes left until candlestick closure on the 4-hourly time frame, and they think it's a bullish engulfing candle, and in those 15 minutes it start going towards the downside, not giving him a entry reason because it's not a bullish engulfer, it becomes a bearish candle or something like that, and then he loses his trade, and that's very important. So we wait 1 hour and 17 minutes now until bullish engulfing candle close. If this does succeed and become a bullish engulfing candle, it's a pretty damn good reason to enter a trade towards the upside, because it's a bullish engulfing candle. This is a new higher high. More than likely it will retest this higher high before breaking towards the upside or the downside, breaking this trend line, right? But because on the daily time frame is trending towards the upside, we are looking for buy orders, and this should be a good trade reason to do so. So let's say the candlestick does close in around this area. This would be a nice trade towards the upside for at least 60 pips profit. Obviously stop loss, you know, just below the areas of sensitivity, so around this area, or even go a little bit further, you know, that's where the trend line is, around, you know, 85 pips. Obviously not the best risk to reward, but you would have, you know, your take profit 1, 2 and 3 levels as well towards the upside, because more than likely it will continue going towards the upside. This area zone that I just talked about will be just your first take profit level. That's where you take off your first take profit level, move stop loss to entry for risk-free trading, and potential push towards the upside for potential 2-to-1 to 3-to-1 risk to reward ratios. Obviously if you're struggling to understand, you can always use indicators. What I like to personally use in my, you know, trading adventures is moving averages. Moving averages are great. It just shows everything much more clearly. If you want to just be, you know, a naked trader or whatever, you know, don't have a lot of indicators, just use the length of 35 moving average or something in regards to that. As you can see, it's currently trying to break this moving average. If it does break it on the 4-hourly time frame, it's definitely a good trade towards the upside for a continuational push till 80 pips, and then a potential break towards the upside as well. So yeah, hopefully you guys learned something. Hopefully you guys know now a little bit more about naked trading, and peace out guys. Have a wonderful day, stay safe, and goodbye.